Mumbai, Mumbai. Well, tourism and hospitality have been among the sectors worst affected by the global pandemic. While most of the companies are reeling under the pressure and continuing to face losses, Mahindra Holidays and Resorts India says it's bucking the trend.
Well, joining us exclusively is the Managing Director and Chief Executive, Kavinder Singh. Kavinder, thank you for joining us. Tell us about this. It seems rather counterintuitive.
Yes, actually, that's the reason, we are bucking the trend, as was said earlier, is because our model is different from traditional hospitality sector. As you know, that we are in the membership model. We have vacation ownership memberships that we sell to our members. We have about 258,000 memberships that we have sold till date. We are 25th year of our operation. And because of the way our income is accounted, we have a deferred revenue of about 5,000 CR, which is lying in the balance sheet, which keeps accruing. And of course, our resorts keep growing, resort incomes keep growing. And therefore, last quarter, we delivered about 20% growth in profits. Even at consolidated level, our profits were up by 100% in the quarter two.
It seems you're not really worried about this variant of the coronavirus. Why so?
I wouldn't say that we are not worried. We will definitely keep an eye on this because any restrictions do impact our occupancies. I just want to hasten to add, in October and November, we have done about 78% occupancies. Touchwood, December is looking good. We should cross 83, 84%. Looks like we are going to have a quarter in which we will have an occupancy upwards of 80%. Now, that's because in India, for the time being, we do not have as many Omicron cases that we have seen elsewhere. But we are definitely keeping an eye. But one strength that we have developed over the last two waves is keeping a very, very strong safety and hygiene measures at our resorts, which give a lot of comfort to our members to keep traveling. And most importantly, we have learned how to ramp down our resorts and ramp up our resorts. So we have learned few things over this last two waves, and we are really prepared just in case the Omicron were to break out in India.
You have plans to invest about $150 million over the next 2 to 3 years to increase your inventory of rooms. Is that plan still intact? Might Omicron derail that?
Not at all. We are not looking at Omicron as a reason for us to derail our plans. We continue to stay with our guidance of 150 to 200 million US investments in building more resorts. We are currently having 69 resorts in India, 78, which if I were to include Club Mahindra, and if I add the Finnish subsidiary, we are 100 plus resorts. Our aim would be to take our India resorts to beyond 100 in about 3 to 5 years. And we are committed to driving more and more investments, as well as following the asset-light model of leasing resorts. And we are always looking for acquisition opportunities because we believe that we have tailwinds. Domestic leisure is bound to grow. Club Mahindra is very, very correctly positioned for taking the advantage of this situation because we are a trusted name. People in this time would travel to trusted players.
You also have ambitions to get into the property management business. Talk to us about where you are with that.
Yes, we are at this point of time doing very well on that. The branding work is completed. We have identified properties that we would like to brand. Yes, that's one business which has not taken off because of COVID. Otherwise, we would have been, up and running by now. So that's something that we are watching. If we are lucky, if things go all right, then quarter one next year, we should be looking at April, May, June quarter. We should be looking at starting the property management business.
Kavinder, what are we talking about in terms of, pre-COVID and now, I'm not going to say post-COVID because it certainly isn't. What are we talking about in, revenue per available room, that sort of thing, net RevPAR ultimately? I think you got over 4,200 rooms, haven't you?
Yeah. So, the way we look at our business is that we are already above the pre-pandemic levels. If you look at our resort income, we did our income in Q2, which was higher than the pre-pandemic levels, which is the quarter which ended on September 19. And if I were to look at our occupancies, even occupancies are at pre-pandemic levels. So we are currently operating at pre-pandemic levels, even in this quarter. Even our member additions are at the pre-pandemic levels. Now, if I were to look at the metrics that you highlighted, RevPAR, actually in our business, RevPAR is not an important metric because we do not sell our rooms to outside members. Very few rooms get sold, even though we declare that number. But for us, the key thing is the resort income growth, the new member additions, and how our total income is tracking. Like I mentioned, we grew our income by 25% in the Q2 this year, sorry.
Are you getting impacted by inflation? We know that fuel and food prices have been surging.
Yeah, the pricing power with us remains intact. We are in a position to increase prices. Just to let you know, we increased the prices for our membership fee as well as the food and beverage related, pricing has been increased at our resorts. And therefore, yes, inflation does affect us, but I don't think we are going to see a dip in our margins as a result of inflation.
You seem pretty upbeat about the prospects for the company. What do you view as the biggest risk then?
Yeah, for us, always the biggest risk is how can we, if we are not able to increase our room additions in line with what we are looking at, as I mentioned earlier, that we would like to take our inventory, room inventory above 5,500, take the resort count to close to 100. If we are not able to add inventory in time, and good quality inventory, room inventory is not available in India. So we have to create it, or we have to ensure that it gets created. So that's the only challenge that we see in our growth plans. But fortunately, we do not need to borrow. So capital is not a constraint for us. Our capital position, our current cash position is extremely good. We have about 1,040 crores. It's sitting in our books. We are a debt-free company. So really speaking, it's all about how do you build more and more high-quality resorts, which leads to future member additions and which leads to growing cash and profits.
Absolutely, and the way you're going to do it is because you're looking for acquisitions, as you said earlier. So would they be bolt-on acquisitions? What particular part of the body of your company do you think perhaps needs more, let's say, scale?
Yeah, so for us, the scale is really in terms of growing our member base. That's the number one aspect. But you can't grow your member base unless you add new resorts. So for us, the entire focus of acquisition is on adding resorts, not the companies. As you know, we already have a company in Finland. By the way, they did extremely well in the last quarter, July, August, September. So for us, the main thing is how do we really add resorts? And that is where our capital allocation will be focused on. That's where our capital expenditure will be focused on.
Kavinder, thank you so much for joining us. Kavinder Singh there from Mahindra Holidays and Resorts. India, thank you for your time. Lovely to talk to you. Please join us again soon. Okay, let's have a look at the Indian Open. Let's have a look at